So welcome back to another YouTube video. Um, Today we're going to be looking at the Brent Crude Oil. Just taking a little look at what it's been doing over the last couple of months or so, and what my anticipation is, or let's say my forecast is going into 2024. So without further ado, let's jump straight into this. Um, if you've come across this channel for the first time and you're a trader or you're learning how to trade, do please feel free to subscribe. And if you like this video, give me a thumbs up. I'm going to be dropping much more content, much more information and knowledge around how I look at the markets, how I break the markets down. And hopefully, through the videos, you will begin to, gain some knowledge, gain some insight, and it'll be very educational for you. So yeah, please feel free to give me any comments as well. I've previously uploaded 2 videos just looking at the USD CAD. If you haven't looked at those videos, then I'd encourage you just to have a look at part 1, part 2. Hopefully you get some value from that. And yeah, let's jump straight into it. So currently we're looking at, so we're on a line chart. I'm going to just change this line graph to a candlestick graph as always, and then just give a quick overview of what this market's been doing and what I expect it to do over the next in 2024. So starting from here, daily candle, we had this high form on the 19th of September, and then the market started to drop. We had a pullback again in September, and then we formed a lower high. So we have a high here, a swing high here, and then another swing high. Okay, I'm just going to turn on my annotations. Forgot to do that, so I'll do that now. Okay, so once we had these 2 swing highs formed and this pullback, the market begins to drop with a lot of magnitude and velocity down into this key level. Hopefully you can see it. It says $85 a barrel. And it's a large retracement, a big displacement, big displacement. 1, 2, 3, 4, 5 days, very bearish market structure. So price closes below this key level, and then we have this daily candle where price also closes below, but then we have a gap up going into October. So the market gaps up, trades higher, and then drops back down, finds some type of daily support at the key level. So we close below it twice here, and then we start closing above 1, 2, 3, 4 candles above, and then we have another push to the upside, so another attempt to trade higher. 1, 2, 3, and then we get another swing high scenario. So high, lower high, lower high. So we've had swing high, swing high, swing high. So signaling throughout that time. So from September to the 20th of October, so 20 days worth of price action, we're starting to see something form, a pattern form in the market. So that I would call a downward trend. Okay, the market is showing us that it wants to move lower. It's no longer trying to trade and attack any liquidity that's resting above this daily high. Instead, it's saying, look, I want to continue to trade down for the time being, and that's what we see here: a swing high, another swing high, and then another swing high. So we have a high, lower high, lower high, and you can see that here. Can't quite see it distinctively, but there's a high as we saw, a high, and then a lower high, and then price then begins to give way. Take some time for it to actually unwind. 20-day period. So within that period, you could still be thinking price is going to trade higher from this move, because you've got a low, and you've got a low here and a high low. So sometimes that can happen, and price can break out, but it didn't, and we was able to spot the signatures in price. So high, so a high, a lower high, a lower high, signaling bearish market structure. We get the consolidation. We drop back down to the key level. If we was bullish, we would have been looking for some type of reaction here for buys. So we get 1 day up, and then another day where it closes around that level, another day up, closes above. But then going into the November month, price drops. Big day here, another day, and then we start to come down to this key level here, 80, and we see some reaction. So we've seen some reaction here at this key level twice. So this has been some reaction, this has been reaction, okay, and then we get some more reaction at this key level. So price trades up for a few days, we get another swing high, another bearish market signature, another swing high, high, so a lower high, high, lower high. So we've had it 1, 2, 3, and this is the fourth time that we see it. And then price drops again below the key level. A lot of so volume and displacement, magnitude to the downside. We get a pullback, closing above the key level, and we start to see some reaction now. So price goes into some consolidation phase for a few days, trading sideways. So it trades sideways in that time period again. Depending on the condition at the time, but if we was looking for buys, we could have been expecting price to hold above this level and then start breaking back up to this key level. But instead, what we have is more bearish price action, trading down, down, down to this key level. So there's another leg down before we start to see any type of pullback or trading up, retracement back up into these candles. And then we see that coming into December. So I'm going to drop down into my hourly chart. And let's go to that area. Okay. So market has been bearish for quite some time. So from mid-September all the way up until December, we've had bearish price action. So, you're talking like September, October, November, 60 days almost of bearish price action. Price trading down, pushing lower, pushing down through the key levels, and not really wanting to trade higher. And then we get into December and we get that final push down here. Lots of volume in these candles, big magnitude and direction on the Tuesday. And then we get a final drop down into London on the Wednesday. And then we're below this key level here. We get a reaction here, this low in London. So on my chart, it says 3 a.m., but that's because I've got my clock, my trading view clock set to New York time. And, I'll go into more details in further videos. But for now, just accept the fact that where it says 3 a.m. on this candle, it's actually 8 o'clock or 8 a.m. in London, UK. So yeah, price trades higher, trades above, a lot of with big direction, it's a big play, it's a big push away from this low that the market's made. And then we trade upon the day, so we get a nice bullish close on the day. We get into Thursday, and again we get that same push in price. So what I would deem as this seems like there's been a shift in the phase of the market, and not going to go into great detail in terms of what I mean by that, and hopefully I'll unpack that as time goes by in future videos. But for now, there's some type of change in the clock. The clock has changed. No longer are we, pushing down anymore. There's been a change in the price action. There's been a sharp push up from this level here, from this low here. Okay. And this is in December now. So December's showing us a different type of angle for the market for this particular asset. So price trades higher on Wednesday, closes bullish, and we also close bullish on Thursday. And I'm just gonna go back just to draw our attention to just a few things here. I'll get out my my cursor. So first and foremost, these levels here, which as a trader I call levels in the market that represent some form of equal high or imbalance. Okay, just where price has not had the opportunity to trade higher, and it's just made just a very small attempt, a very small push up, but it hasn't really pushed up with a lot of force and a lot of volume. And this move here, this move here, Um, all of this move actually, in this move, we've taken out this daily high and any imbalance that was in these candles, around here, these equal highs. And if you drop down into a smaller time frame, you can actually see how there's relative equal highs in the marketplace. And if you're not sure of this terminology and these ideas, in a future video, I will just break down some of the ideas, some of the words and the ideas behind those words, if you're not already familiar with those types of words. So the market pushes up now, is pushing higher. So take this off. This is in December, the run up to Christmas. We get the Friday consolidation. Price tries to drop here, but it pulls back up, consolidates, and then we come into the Monday and we get a nice consolidation, a drop into London, and a nice push in the London session. So we've had a nice push here in the London session. We've had a nice push back here in the London session, and we had a nice push here in the London session. So very distinctive time where price is pulling away, is pushing higher. It's no longer trading lower. So London here, and then again coming to the new week, London here. So Monday, London pushing, and then again London time zone pushing again. And London just represents exchanges. So at 8 o'clock in London, UK, the London Stock Exchange opens up. And you can find this information out online. Within the time frames of trading the Forex markets, you've got the Asian session, the London session, and the New York session. And it just represents times in the market where the probability of expecting certain price movements is very high, just based off the volume, just based off the amount of transactions that are taking place in the marketplace at set times. And it's very similar to the New York Stock Exchange for the equity markets that opens at 9:30 in the morning. And if you're an equities trader or an options trader, that's a very significant time in the morning for you, because you know that when the market opens up, there's a lot of volume, there's a lot of transactions, there's a lot of it can be a lot of noise as well, and it just provides an ample or a great opportunity to be able to get into your trades and to exit your trades within a short space of time. And it's like, when a business opens up in the morning, you've got customers coming to the shop. It's that type of analogy where it's like, it's time for business. It's time to transact, basically. And that's what I mean when I refer to London and New York. It's just a time zone where you're likely to find trade setups. And we can see that here. If I was looking for buys and to trade in London, I'd be taking my buys here and then potentially exiting my trades at this key level here, because I know there could potentially be some resistance here or whatever. But as you can see, there's been no resistance. We've traded straight through, consolidated on the Friday, and then as the market opens for this pair, this commodity on the Monday, it drops down, and then lots of volume. So momentum candles 1, 2, 3. We get into Tuesday, similar kind of behavior in Tuesday, another push up, and then we've got the daily high here, and this is the daily high here. And then on Wednesday, the market drops down into Asia, again trades up into London. We take out this daily high, we take out this daily high, and then Thursday we trade up in Asia, trade down in London, and then trade back up. So it's sideways behavior, which leaves this daily high, and then Friday we've got these relative equal highs here with this daily high here. So liquidity is resting here, liquidity resting in here as well. Okay. So I am very, very keen in taking trades on Brent Crude Oil going into 2024. And that's just based off the previous price action. So from September all the way until December, we've been in a downtrending market. Okay, so that's like 60-day period where the market hasn't really had the opportunity to trade higher and move higher. Markets don't just trade down, they like to trade up, and we haven't really seen this market really trade higher over the last 60 days, okay? So that's one thing. I think the second thing is, if we just go back to the daily chart, I'm just going to take this off, go back to the daily chart. From a technical standpoint, if we look at this high and this low, we can see that this market has been trading in some form of downward channel, for technical purposes. Okay? So there's been a channel that's formed where the market's bounced off certain areas, okay? So you can say here, this type of behavior, here, and here, and now it's broken out of this, it's broken out of this channel. We've got resistance here at this key level. As you can see, we haven't closed above it on the daily. We are on a daily time frame here, and the daily candles haven't closed above this key level, which is 80. We haven't closed above it. So what we could see is price come back down to this key level, and then, so if it goes like this, comes down here, maybe it dips down to here, and then it starts to trade above here and trade higher, going into January, February, and March. So that's what draws my attention to this particular instrument. Is if I'm looking at this now, if I take this off, my understanding of the price action, my understanding of specific patterns that occur within the price action, I'm looking for buys on this instrument, okay? And what I'm doing is I'm putting a 3-part series together, this being the first part of what I anticipate price to do going into the new year. So going into 2024, where am I looking to take my entry points on this Brent Crude Oil? And what do I need to see before I take my entry points, to go long on this particular trade? So we're going to drop back down into an hourly chart. And I think just in terms of what I've highlighted, what I would like to see, because if you put it back to a line graph, we've been trading from here. I'd say from here, we've had some sideways trading. So there's some consolidation here. So something needs to happen. And I would like to see price from here, because this is the close on Friday, trade back down to some extent, back down here. Okay. And what I'd be looking for is for these levels to be taken out. So these are lows here. If we just put this back on here, that's a low, that's a low. So for these levels to be taken out, you've got liquidity resting here, you've got equal lows resting here. I'd like to see price trade down and then find some support here and then start to make its way back up. Signaling to me that this market is reversing and it's breaking out of that sideways bearish price action pattern and now wants to trade up and trade higher. That's what I'd like to see going into 24, January, February, and March. So what I'll do is I will keep you updated on Brent Crude Oil in the next video, and I'll post that in January, beginning of January, and we can see how price has behaved. Probably first, second week in January, how price is behaving, and if it's given me the opportunity to take those buys, and I'll share my entry points, I'll share my targets, and I'll give much more overview of how I've arrived at these conclusions as time goes by. Because I'm not just looking at the candles here on price action alone to kind of gauge where price is moving. There's other tools that I have, and that gives me much more of a clean and clear, distinctive direction for this market. All of my trading is based around direction of the market. Once you know the direction of the market, it becomes just a great experience in terms of taking trades and getting into the trades at the right time. Being able to take your profits at the right time, at the right levels, and really just takes your trading to a whole nother level once you understand the direction of the market. So for me, for now, I believe that this market is going to trade higher going into January, February, March. It's going to be when it trades higher, but I would like to see some this price drop probably back down to this key level, just around this level, and start to give me those angles that I'm looking for to go long on this instrument. So I hope you like this video. It's a different to looking at currencies, but one thing I'll say is price action, no matter how you look at it, whether it's equities, whether it's currencies, whether it's commodities. We're all looking at the same discrete time series, and within every time series chart, there's always going to be a level of periodicity, and within that itself, there's frequency and there's repetition. So these patterns repeat themselves all the time, and that as traders, it gives us a great advantage really to be able to understand what those patterns are, discern the direction of the market, and then trade according to those patterns and those frequencies that occur within certain time frames. Okay. So if you found any value from this, please do give me a thumbs up. If there's anything more that you'd like to know in terms of my understanding and my knowledge, then just drop me some comments in the comment section, and I'll be more than happy to provide some more insight and some more understanding as to how I see these markets and how I'm able to kind of forecast that far into the future. So yeah, I think that's it for now. If you're new to this channel, also I would say, hit that like button, subscribe, and I'll be dropping more content in 2024. And have a great Christmas.